Hey, good evening. I'm Dan Fitzpatrick at StockMarketMentor.com, and it is Wednesday, August 26th. A lot of volatility in the market. This Mankind stock is no exception, and so I want to chat about this real quick. This has a really high short interest. It kind of always does, and you look at times like this, and you can say, well, the shorts were right. You know, they were sure right about this one. They were sure right about this one when they company received approval. I think this was the approval one for their Afrezza insulin delivery system, and the stock just absolutely got crushed. Maybe that was for something else. I think it was over here. Anyway, it doesn't really matter. The point is, because I've been trading in and out of the stock. I don't have a position right now, but I've been trading in and out of the stock for a while. But I remember this would have a big move higher, and you'd think, oh, those shorts are going to get screwed. And they did right at the open, and then the stock continued down. So we have the same thing here. Here's my point. The last time the stock came down to this level, it really started to rally hard. I think that was a short squeeze. I'm looking at this here, and I think you could see another one coming because the stock is down. It's down to a really low level, the lowest, right? So if you're buying the stock, and I think I'll be doing that tomorrow. If you're buying the stock tomorrow up here, you want to keep your stop, a really tight stop, right down here beneath 325. Now, that's a pretty hefty risk. It doesn't sound like much, but it's 40 cents. Okay, 40 cents on a $3.65 stock, isn't chicken feed unless you're only buying 12 shares. But what you're looking for is this. So let's say you buy some at the open tomorrow, and then you also then wait until the stock goes above yesterday's intraday high, where it gapped up and then tanked. That high was 382. So you're buying a little bit here, and then you're taking a full position at 382, 383, 384, whatever, when it's above here. Now you're at a full position, and then don't look for much. For crying out loud, you got a full position size on at 382. If you can sell it at 425 or so, that's a good trade to me because the stock's so cheap. On the other hand, if the stock doesn't ever get back to here and instead falls below this 325, then you're out with a small loss because you had a small position. Anyway, that's how I would trade Mankind, but this trade all stems from two things. First of all, the market is no longer under massive distribution. Second of all, this has a very high short interest. And third, it is down at a level where it did bounce before. Here, it's been trying to. So we manage our risk by taking a little position now and then build on it once the stock shows you that it is actually moving higher. So, okay, members, over to the strategy session. We got some work to do.